Okay, good afternoon, everybody, and welcome to the show. This is optionprofessor.com, and we are going to discuss the Forex markets, and we will be sharing our opinions and our observations on what we think is going on, and the US dollar and the other currencies that are out there. We're going to look at things on a long-term, short-term, and intermediate-term basis. Okay, so you get a full flavor on what's happening and maybe get a good idea of where the trends might be developing. With regards to optionprofessor.com, I'll talk about this at the end, but to give you a brief introduction, I'm a graduate of Boston College, and we've been doing webinars and seminars on options and all investments for decades. So we're going to share with you our knowledge and our experience in these things and our analysis, and hopefully you'll be able to glean some good value out of the broadcast here today. Okay, so right now we are looking at a dollar index on a 20-year chart, and you can see the dollar index back, let's see when that date starts here. Yeah, 2002. So it is a 20-year graph. And you can see back after the crash of 2000, the dollar got very strong, apparently. It was all the way up to 120. And then as the market continued to go up during that time frame of 2002 to 2008, the dollar generally was weakening rather significantly, as you can see, from 120 all the way down to 75. So the last time we had a very large, the first economic recovery, the dollar was going down pretty much the whole time. Then we had a crash, and obviously during the crash, people jump into the dollar. So the dollar had a nice little rally up here towards about 90, 89, 90. You can see that's been the support. So like everybody's very, very negative on the dollar, but it's not coincidental that it's been holding the dollar index, this 88, 89 area, right? Because you can see that's the former highs here in 2009 and 2010. And it's also the low here, which came in 2018 before the stock market had that big drop, right? So when the stock market had that big drop in late 2018, everybody ran back into the dollar, right? And then, of course, the dollar was rising throughout 2018 and throughout 2019, as you can see. And so the stock market was in the process of it hitting a high point. And then, of course, it was starting to roll over a little bit in late 2019. But then we had the crash, and then boom. So when there's a crash, the market obviously tends to go into the dollar. And now the key is we're down here. And if we blow out the bottom here, that probably would indicate the stock market is going to break out to the upside. That would be our guess. If this market is going to be unable to get through this 4250 neighborhood on the S&P, and you're going to get that 5 or 10% correction, then I would look for the dollar to spike back up and maybe even surprise people going back towards 95. And that would be surprising to people, but not surprising if the stock market were to roll over and have a significant correction. Why would that happen? The inflation numbers coming out tomorrow. Everyone's looking for a high number. China just had a number of 9%. It wouldn't surprise me if we have a similar kind of number like that. Now, the question is the market going to freak out about that or not? I mean, the Fed has been as clear as a bell. They don't care about these bottleneck inflation numbers and these things where, if you shut down the economy in 2020 and there is no supply of lumber and then you got a weather issue on the grain, and maybe they don't even plant as much grain. And then you've also had bottlenecks and weather problems in other commodities. You're going to get a big bang to the upside, like copper. Those mines in Chile were probably closed. In Peru, they were probably closed during the COVID, right? So bottom line is you close down production, and then everybody wants to build a house because all of a sudden they're romantically connected to their homes again, or their living conditions after you had to be home all the time are untenable. Then obviously you're going to get a big demand into the property, and ergo you're going to get a big demand into copper. And if they've shut the mines down, you're going to get a bang to $5 copper. That's basically what happened. Okay, since that we know that's happened, what is going to be happening? Well, do you think they're going to plant some more grain to fill that in? What about the price of lumber? It's already tanking pretty good. And so that's why they're saying a lot of this stuff is transitory. You know, they don't have chips to make any new cars, so the used cars went nuts on the upside. Anybody who knows anything about used cars, they generally don't sell like hotcakes, right? So is that going to roll over once the chips come out and they can start building the new cars? Probably. Right. So that's where they're getting the transitory thing from. A lot of the stuff that's making prices go up very sharply can be rectified by the supply chains being coordinated. Of course, we just had a situation.
Hey, Jimmy, you there?
I'm back with you. Yeah, I got muted for some reason.
I think you got completely disconnected.
Yeah, I'm back on now. Do I have to do the whole thing over again, or?
I
feel like I'm up and running again.
Yeah, you just have to reshare. Just have to reshare your screen.
Oh, okay. Reshare the screen. No worries. Boom, and then boom. We should be all set. Back up.
Yeah, it's loading.
Loading.
Okay. Maybe. Now I see it.
Okay. We okay?
Yeah.
I shouldn't start over. Just go from where I was, correct?
Right. Yeah.
Okay, sounds great. So anyway, we were talking about obviously the inflation number coming out tomorrow, and we were talking about the expectation that it's probably going to be a hot number. If it's accurate, it's going to be a hot number. I mean, home prices have jumped 20%. You know, we all know gas has gone up, so I don't know what they're going to be looking at if it's not a hot number. At any rate, so what's that going to do to the dollar? I tell you, my feeling is this: is the dollar starts breaking down under 89 and 88. Then you can see from this chart, and the RSI is under 50, it's going to be sayonara to the dollar. And if that happens, it might be a situation where the stock market goes nuts on the upside. A lot of people are looking for melt-ups. This guy Kalanovic over at JP Morgan is talking about the big advance that he's looking for is starting to happen right now. This guy, Tom Lee over at Fundstrat, he's talking about energy prices have got a big bang to the upside coming. So if this dollar, again, holds this area, though, and these people are incorrect and the thing goes the other way, which would be surprising to a lot of people, but not illegal, right? Things happen that people aren't anticipating. Then the dollar may actually surprise people on the upside, not unlike the interest rates have surprised people on the downside. The 10-year note is under 150. Everyone in the world's looking for higher interest rates. They got to keep looking. They're going to need a night lamp because it's not happening. And so there's a lot of weird stuff going on here. And again, when the rates are this low, it doesn't help the dollar as much as it used to. So the bottom line is there's the dollar index on a long-term graph, and it is in crunch time. Again, just repeating what I said, you see these high points here and that low point here. So your line in the sand comes in 88.89. If you can't take that out and the winds of change blow, you got a lot of people short, they could cover. And again, Europe is having some trouble opening up, right? So let's get into the euro and let's see what I can show you there. We'll go over currency by currency. Okay. Now we were very bullish on the euro in our weekly updates and our newsletter. Very bullish on the euro. Once it got above 110, I think 105, 110, and we wrote it up pretty nicely. Then we thought it was extended and would have a pullback, which it did. So let's show you where now. Let's go a little bit more like in the last 1 year here, but we'll get an idea of the short term for the long term first. It definitely looks like it bottomed here, and you can see we got long at 110. We thought it got extended up here at 125. There was a former high up there, 125, and we caught the pullback down. And now we are obviously back positive once it got back above 118. So 118, and we're following the moving average up. Right now, we'd like it to stay above 119. So, and the RSI is above 50. So there's a reason to be bearish on the dollar, and there's a reason to be bullish on the euro, okay, right now. Now, let's take a look at shorter term graphs. Now, again, what's going on in Europe? They're talking about another lockdown maybe. And, they're having a hard time getting the flights going back and forth to the USA. And there's still a lot of problems between the EU and United Kingdom, England, because obviously they're gone their separate ways. And Northern Ireland's a hassle. And, some of these other countries like Spain, everything's not hunky-dory, and Italy, their balance sheet's all messed up. So, it's not clear sailing, but it does look like if we're going to be continuing to stimulate, continuing to print money, continuing to run huge, enormous deficits, that people are starting to favor having their money overseas in the euro versus the dollar. Now, again, if we were to break above the 125 mark, you open up 130 and maybe even a run to 140. And since the moving average is pointing that way and the RSI is pointing that way, that would be the way to bet, Conversely, you have a double high point up here at 123. So if you were ever to take out 116, 117 on the downside, that would get my attention, because then your RSI would probably go back under 50. And if it goes back under 50, you can get one of these kind of deals. So there you got some pretty good resistance and support. Right now it looks like you should be long. It looks like you should add if it gets above 123, 124. And it looks like you better bar the door, Katie, if you take out 117, 116. And those are pretty good parameters to work with. Now let's look on a short-term basis. Shorter, we'll go to the 1 year. And again, this is a little bit curvy here. So like I say, right now on a short-term basis, this thing gets underneath 121. That wouldn't be very good. And let's see what the, see, everything's good. RSI is above 50, so everything's good. Okay. But if you break 121 and you get that RSI to go underneath 50, whenever the RSI gets underneath 50, it looks like you better get on the sell side. You can see here it had a pullback, right? This pullback from 121 down to 120, but the RSI never broke 50. So that was a great time to take a shot at the buy side. Why is that? Because you can see these high points here. They're now support once they got broken. So all it did was come back and test that support, and it did that. Then you had a low surrounded by higher lows. So there's your signal. Then, of course, once you get back above 120, you got a better signal because now it's back in the upswing. Right now, this thing comes in at around 121. It comes in right around where we are now. So frankly, on a short-term basis, I'd like to see this thing. Let's see what it looks like on a 6-month. Yeah, it's a little bit teetering right now. You can see because this moving average is starting to roll over a little bit, and it got above it, but now it's back underneath it. So, this thing starts closing underneath this 122 area. And then if it starts taking out 121, you might be getting more of a correction. And of course, if we're going to see a strong dollar, then this stuff is obviously going to roll over. Right now, again, it looks like it's trying to break out, but it's not doing such a great job. Let's see with the RSI. See, RSI is still good. So it's too early to get negative. You don't want to really be selling stuff when the RSI is above 50, and it's very close to 50, because you may get lucky and get a little dip like this, but more than likely it's going to be going like that. Again, this thing has peaked out at 122.15 on the moving average. Basically you're looking at 121.71. So again, if it starts deteriorating and then takes out 121, I wouldn't fight the tape at that point, because something must be happening with the US dollar holding that 88, 89 area, and something might be happening in the world that's making people, get a little bit more positive on the dollar. This thing has had a pretty good run, 117 to 123 area, 122.75. That's a pretty good run. So if it did want to pull back, where would some of the places it could stop? There's some highs there that it could bounce off of in the 120, 121 area. Let's look at a shorter term one still, the 1 month. And the 1 month, again, it's kind of choppy, right? This move up here was where's the RSI here? No, the RSI made a new high, so that's not bad. And the RSI is right down to where it should stop. So, again, you don't want this thing under 121.50. You definitely don't want it underneath 121. So you've got lines in the sand underneath that you certainly would like to see hold, because if it does break the 50 number, sometimes it can give you a little bit of a drop. Now, this is a short-term graph, so this would be for guys who are definitely doing scalping and short-term trading. So again, I don't see it on the sell side yet, but I definitely see it a situation where you better monitor it. And again, right now, getting above 122 and change, that might get the bicycle going too, because as you can see, you have a pullback, you take out the high, you make a new high, you pull back, you don't take out that low. And so if you can take out 122 and change, that could be a horse you could possibly go back on and ride. Let's take a look at the 6 month here. Yeah. So yeah, you start getting above the 122.22 area, you might be able to get this thing going again. I don't really like when it starts bending down like that, because bending down sometimes leads to more bending down, right? And when you're making the big money on something like this, generally the moving average is rising. So mixed signals, and that's why everything's a little dodgy right here, because we've got a Fed meeting next week, and are they going to come out and talk about tapering? You know, tapering and reducing their balance sheet might be bullish for the dollar. So, you know, again, and then of course he wanted like $2.5 trillion or something for infrastructure. If it comes in at 1 trillion, 1.2, that's a heck of a lot less spending. That means heck of a lot less deficits. So if you have less deficits and you have a Fed that's tapering and looking to get their balance sheet down, that could be positive for the dollar. And that's why you have to be flexible in your opinion when you're trading, because, you know, things do change. All right, so that gives you a little bit of idea on the euro. And again, it does look like the parameters here seem to be 122.75 on the upside and about 121 on the downside. And it's kind of range bound. So a breakout of this range would give you a better idea. You know, again, it would be nice for it to get going and stay up. So these averages will look more like this and a little less like there and there, right? And your RSI, again, is hanging around the 50 mark. But, you know, you take out 121, I would imagine you're going to break the 50 mark. And then that could be schools out on the euro for a time being. Okay, let's take a look at the yen. The Japanese yen. Oh. All right, there you go. Now, Japan's got, from what I read, seems to have a lot of problems. You know, their GDP doesn't look very good, but their profitability on their companies are doing pretty good because they're exporting everything to us, and our consumers buying stuff like crazy. Their Nikkei went up towards 30,000, but I haven't seen much progress since then. This is let's go back a long ways and put it into long-term perspective and then short-term perspective. Okay, this thing is underneath 50 on the RSI, so that's not that great. And it's underneath 93.64, so that's not that great. Obviously, it's range bound here, pretty tight range too, when you think about it. This goes back to 2018, and you pretty much have been between about 88 on the downside and about 95 on the upside. Lately, that's floor has been moved up to about 90, and the ceiling again remains at about 95, 97. So there's your window, and then it does look like it's deteriorating right now, and it does look like the RSI slipped underneath 50, which, you know, it can do here a little bit and then still keep in the meandering phase. But it doesn't look like it's getting prepared to do this or that, and that's where obviously the big money's made. You know, after 2008, when we came out of recovery, the yen did very, very well. Okay. And so bottom line is I don't know if we're going to, and then of course it did very well right after we had the crash. So right after the crash, the yen tends to do well, obviously because we stimulate our economy, which makes consumers buy a lot of stuff, and Japan sells a lot of stuff to us, right? So using logic as it, right after the 2000 crash, by 2002, this thing was on the bicycle. And then it had a little pullback going into 2008. And then after the crash in 08, it really got going again because we started doing quantitative easing, and quantitative easing got people buying stuff, right? If we're buying a lot of stuff, it's definitely coming from China, Korea, and Japan. You know, that's pretty sure that's where they're coming from. And then, of course, after 2012, it had the big drop here into 2015, popped back up, and it's been meandering pretty much since 2016. And again, it's given a lot of choppy activity, which is, kind of hard to work with because it's not a real solid trend. It's been hovering around 50 on the RSI pretty much the whole time too. So this is one where you have to look at shorter term graphs and play for smaller swings. So let's take a look at the 1 year and see what that's telling us. You had a nice sell, nice sell when the dollar index probably went up towards, well, actually, again, with their economic numbers as far as their personal economy, because again, they have an aging population over there. And that's probably one of the reasons why they can't get their GDP or inflation going. And of course, we all know they just print money and buy their own securities. So the bottom line is their deficits to GDP is just ridiculous, but they've been able to survive. But, their balance sheet is absolutely comical. Anyway, again, we broke underneath the 50 number here, and you had a nice little drop, and then it tried to make a rally, and then it came back to 50, but it failed. And then it had a rally and came back to 50 and failed. So until we get the RSI above 50 here, I would be one to be very hesitant to get too bullish on this yen. And again, you could have a nice 1, 2, 3 formation here where you have a one move up here, a pullback. And then if you can take out 91.56, then you might be onto something, because then it would be above its moving average. The RSI would get above 50. And that might be a situation that would tell you that, there's something going on there. Shorter term still, 6 month. Same idea, you need to kind of get above here, 91.50 to get started. Those lows, clearly, you don't want them taken out. And if they are taken out, you'd probably want to be on the sell side, right? And the RSI is indicating it has no relative strength. Real short term on the 1 month, if you're doing very short term trading, it looks like it's given it up. And the RSI was above 50, but now it's under. And there's your moving average there at about 91.32. And then it's also right where all those lows are. So if you're on the sell side, you wouldn't want it to get through 91.31. Moving averages there on all those lows. And if it can take out the recent lows of 91.19, then it could open the door for further downside. Now, real short term on the 5-day, what's it look like? So yen's tricky, though, as we saw, and you can see it doesn't respect the moving averages that much. Markets that are on all different sides of the moving average are not the ones that I like to gravitate to, because that choppy behavior can get you stopped in, stopped out, or whatever. So the yen's a little bit of a rough racket. Let's just say a 5-year graph. How's it been doing? Yeah, you got a low there. And then you've got a low there. So it hasn't taken out that low. RSI is way under 50, though. That's not great. This thing is looking like it's trying to stop, though, right? It's looking, this is on the 5-year graph. It's looking like it wants to go. You can see if the RSI can stay above 50, sometimes you can get a little bit of a move. That's why I'd like to see this RSI above 50. But I'll tell you, it's a great setup for a spike up if we look at the one move up to here, which is 93. The 2 move back down here to 90.50, not taking out the 90 number. And now if you can start taking out this number up at 93 and 92.50, and then this thing starts curling underneath it, maybe the second half of the year, the yen would be something to look at. Right now, my view on the yen would be, it's if you had to do anything, you'd be selling it. And if you wanted to buy it, you'd probably wait a little bit and try to get these RSIs above 50 on some of these shorter term and intermediate term graphs, and then maybe get this thing on the right side of the moving average. Again, I could see this as a taking off situation, but not at this price. I'd have to see a little more price evidence. Price evidence above 92 would be a very good start. And then it would make this look like the low. Then you know where you're defending. And it would also make this thing look like the low. So now you know where you're defending. And what did we come down from? 97 here. Let's just do a little measuring for you. 97.50 minus 90, where it came down to. That's 7.5 points. Take 61% of that, add it to your 90, and you're in the 94, 95 range. So it could go up towards this area here and still, still just be chopping around. So if this thing got going, a 61% throwback takes you to between 94 and 95. And a taking out of 90 even looks like it sends you into some acceleration on the downside. So a lot of these currencies, like everything else, are kind of on the ledge. This S&P is at 4,200 and change. Is it going to go to 4,400, 4,500 like a lot of these guys are talking about? Not without taking out 4,240, it's not. And then you've got the transportation average and other factors that are not making new highs right now. So it'll be very interesting to see how these things unfold. And there are some people that I've heard from some of the big companies who are thinking we hit peak earnings already, not peak earnings, but peak growth, and that we're going to have stagflation in the second half of the year. And that's an interesting concept. These guys who've been saying interest rates yields are not going to go up, they've been accurate. And if yields are not going to be able to go up, you wonder how much growth there is in the second half of the year. But let's keep going with the currencies. And so there's the story on the yen. And be very interested to keep an eye on this, because if it can start turning, it would be something we would find very interesting. But right now it's kind of choppy. All right. So we went over the euro. We went over the Japanese yen. Let's go over the British pound. Because they are getting their act together with the Brexit and all that. And they're supposed to be opening up their economy. And there was a $1 billion inflow into a Europe fund over at BlackRock. One entity put $1 billion in it. I think it was yesterday. And so obviously there's a lot of people who believe in Europe. And if you believe in Europe, maybe you believe in their currencies. So let's go back 20 years and get an idea. These guys tanked when they had that Brexit problem, really tanked. As you can see, this has been a little bit of a devaluating currency ever since 2007. This pound sterling used to be at 210, dropped all the way down to about 110. So that's 50% off in the British pound. And that low just occurred in March of last year during the crash. So it got back on the bicycle, right? And so you got your buy signal here, and you should basically be long from 128 and still riding the tiger. And the RSI has also gotten above 50, and it got above 50 right here. So your buy signal here came in again around 130. So anything above 128, 130 was the buy signal, and you're riding it right now. Moving average comes in around 136. So anything could happen as far as a pullback is concerned. It's having some trouble up here in 144 area, because that's where some former lows and highs are, right? You can see that from the screen. So it could have some troubles dead ahead, but if it breaks through there, I mean, this thing used to be 210, it used to be 170. So, going back to 150 is not off the chart at all. So this thing, if you can keep going, and this RSI at 55 is not extended at all. So keep an eye on it. It looks strong. Let's see what it looks like on the, let's look at the shorter term. Yeah, you're at 139, 140 on the support. So that's on a 5-year graph. It broke it here, but notice when the direction of the moving average is up, even if it breaks it for a short period of time, as long as it gets back above it and gets back on the bicycle, you're in good shape. And same thing here. So this thing, right now, it looks like obviously it has potential to pull back. But this 139, 140 area should be some good support if it's still going to be a good market. Let's look at your RSI here. The RSI is up in 60. That 60 area has been a resistance on RSI. So let's see if a pullback looks possible as we go to shorter term stuff. Let's go to 1 year. Yeah. So again, it's starting to look like it's a little tired up here. Let's look at the RSIs. Yes, RSI is pointing down. And there's a little bit of a divergence here. You see the high point here at 142 and change. And the RSI was way up here at what? 65. Now you've made a new high up here. And your RSI has been peaking out at 59. And that's called a divergence. And that could mean that the market's getting tired and it is running out of buyers. Again, the overall trend, though, is up and the overall RSI is still good. Let's see if there's any other sell signal we could see here on the 6-month graph. The 6-month graph right now is showing there's a lot of resistance, 142, 140, 150. So if you want to be negative on this, that would be my line in the sand here, 140, 150 to 142. You blow out 140.86, and that opens the door. RSI is still above 50, though, and that's not great if you want to be negative. How about the 1 month for the scalpers and the short-term traders? All right, well, you got to sell on this one. You got the sell coming in about 141.68. So that's why we're saying if it can stay under 140, 150, 142, then maybe the path of least resistance will be down. Short term here. And be much more exciting if you can get above 142. So if you're bullish, you know, you really want it above 142 because where it is now, it's very susceptible to falling down. 5-day graph broke it here, about the same area, 141.77. Still looking like it's going down. Let's look at the RSI. RSI is down at 39. So when you're trading, you know, combining the chart, a moving average, and an RSI is pretty much ingredients to try to give you an idea of where the flow of money is going. Obviously, it gives you some parameters too. So you have an idea of where you wouldn't want it going and where you might want to cut and run if, in fact, you're on the wrong side. Otherwise, you know, it's abject guessing, and that's a rough racket. Okay, so the British pound, again, pretty much like the euro, pretty much like the yen. These things are like they've had runs in some cases and they're kind of steadying out. And I think how the next 3 things that are coming out, which would be our CPI on Thursday, and the next thing, which would be the Fed meeting next week. And then the earnings that are come out right after that, and maybe how the infrastructure bill goes through or doesn't go through. These could all be factors.
Hey, Jim, are you still there?
Listen, crash. Let's take.
Yeah, okay, no sound. Hey, David.
Hey, Anka. Yeah, I think Jim got disconnected again. So he
I've been having pretty funky internet connection today as well.
Oh, yeah. Okay. I think he's back now.
Uh-huh.
Are we having a problem with the internet connection, David?
Yeah, it looks like you got disconnected again, but
you think it might have anything to do with Fastly?
Could be, yeah.
All right. Well, anyway,
you'll need to reshare your.
Okay, 1 second. All right, let's share the screen again. Share. Share and share.
Okay, I see it now.
Okay. All right. We're over on the Australian dollar. If I cut out before I told you about the Australian dollar, this is a currency I find very interesting because you get a little play on the gold and silver and oil and stuff like that because they got a lot of natural resources. And basically, you got an economic turnaround going on there as well. So bottom line is as I was saying, during the crash, you could have gone over there and whatever worth you have now would have been doubled as far as their currency is concerned. And that's not a terrible decision to make. And you've also now gotten a big run from 55 to 80. So you got very much richer and you were in an awfully good area in Australia. This thing obviously has turned up and the RSI has really just turned up. So this thing could have a lot of runway. It could have a lot of runway. Based on the economic turnaround, the stimulus being given, the dollar maybe fading, and then of course all those metal companies would do great. All those
Hey, Jim, I don't know if you can hear us, but the sound just is not coming through.
Yeah, it looks like he's out again.
Yeah. Okay, he's gonna probably pop up again.
Yeah.
Here he is.
Is everyone muted?
Hey Jim. Yeah, can you hear us
share
now?
Again? Yeah.
Yeah.
I'm doing a lot of sharing today. I feel very generous.
Yeah.
All right. Are we back up and running?
Yeah.
All right. So we were talking about the Australian dollar, and we're talking about it's in an uptrend. We're talking about if it breaks above 80, it could start accelerating to the upside big time. That could happen later in the year. Right now, you certainly don't want it underneath about 75 cents. So there's your parameters, 80, 75. And again, since you're smack in the middle, you'll have to go to the shorter term graphs to get an idea of where the short term is telling you what's going on. So we'll go back to 5 years. And as you can see, if it does break underneath this 75 mark, it could say timber. Again, a lot of markets have had a very big run. And so pulling back is not against the law. If it did pull back, you'd imagine 74 area might give you some support because there's some highs right there, right? So there's your parameter on the downside. What else do we have here? Let's go. And what's the RSI looking like here? Yeah, it's looking like it's fading a little bit, up here. Again, another kind of a divergence here. You got RSI up here at 65, and now your RSI is fading into the 57 area. But again, it is still above 50. And so again, a drop of significance would probably be joined with a move under 50 on that RSI. Let's go over to the 1 year and see if there's any more deterioration. You do have what? High, lower highs. So if you blow out 76.50 and then you blow out 76, this thing could pick up a little bit of steam on the downside. And you're right at 50. So if I'm a short-term trader, I'm not looking, well, if I'm a trader looking for big upside, I'm not looking for any big upside until it blows out 79 or 80. If I am a short-term trader, I'm looking to get on the sell side here if this RSI breaks under 50, and if the prices start breaking under 77, 76, 50, 76. And let's say the 6-month deal. Yeah. Again, pretty tight window. And that's a 6-month chart. So since April, you have been in a window of, pretty much a penny and a half, right? You've got 78 there and about 77 there. So, not a whole lot of fortunes being made there by position traders. So then if you're in that kind of a market, sometimes you need to have a shorter term graph to give you ideas on the swings. Again, there you got a big head and shoulder action on the 1 month. And so clearly if you can get above 76, 77.60, well, 77.80, 77.70, it could give you a little bit of an idea that it's turning up. The RSI is right at 48. So if you're short-term trading it and the thing gets above 77.64, 77.70, you could consider an entry there with your stop underneath this neighborhood of 77.30 and see if you could ride a wave as this thing gets back above 50, if that occurs. Let's see on a 5-day, can you swing it pretty easily here? Well, you had a nice run here. And then it started to go through and then another run. And then it's been kind of fading. Then it popped and now it's in the fade mode again. Again, these currencies look a little choppy to me. So that's why this is not the most ideal time to catch a larger trend, because the market seems to be waiting, and it's probably waiting for the things that are coming up. This Q2 earnings in the United States, are they going to be robust? I would imagine they would be, but you don't know. What about the interest rates? They're fading. We're under 150 on the 10-year. Are they going to 120? Well, if they do that, that could have an effect on these currency markets. And then, of course, you're looking at the CPI, in the inflation numbers. Are going to be big like China's was, and that could have another thing. So right now they look indecisive. I would call the foreign exchange a little indecisive, but I think I'm quoting some good parameters. If this starts getting taken out, it's telling their hand. If it goes the other way, it's telling their hand. Right now, their hand is kind of choppy and kind of sideways. But on a longer term basis, looking longer term, if we are going to have a reflation trade, then the metals probably have a future. If we are going to have a reflation trade with energy, then the natural resource countries probably have a future. That's the macro view. And then if you have a macro view, what you try to do is use the charts on a 1 month, 6 month, 1 year, 20-year, 10-year basis and develop a trading strategy around the macro view. Knowing very well with a macro view, you're still going to get some gyrations against the overall trend, because that's just the way it works, right? All right, let's talk about the second currency that is commodity based in our opinion, and that's the Canadian dollar. And the Canadian dollar also, just like the euro, was in a giveaway fashion fashion during the crash, and you think that, listen, when the storms close, they're going to go back to Starbucks, they're going to go back to McDonald's, they're going back to Walmart, they're going back to Target, they're going to go to Chipotle, so when they tank these stocks and you feel like the world's not coming to an end, you got to view it as something to get involved in. When these countries' currencies tank, it's the same idea. Australia is not going to go belly up, I don't think, and neither is Canada. So again, this is almost similar to buying into the markets when they turn. Let's take a look here at a 20-year graph, and you'll see the Canadian dollar, used to always trade around $1, pretty much. Goes down to 75, you buy it, goes up to $1, $1.10, you sell it, and that seemed to be the way it worked. Now it had a big drop from the 110 area all the way down here to the lows of around 68 cents, which coincidentally, look at the chart. So if you're following this stuff, there's your lows right there. So anything you're doing, that area there had better not get taken out. And then basically, once you got above the moving average here, there's your buy signal at about 74. And that's about the time the RSI crossed, around 74. So your RSI crosses 50, you get above your moving average, and that's the time to throw your buy ticket in. Now, you're rallying, and obviously it's a bit extended because we're up at 83.84, and the moving average is down to 78.80. So you got some real estate there. Plus, you just hit these high points here. So you've got a high point neighborhood, right? And you got a low point over here in 2009 area where it took off from. You know, you can see that was a very big point. Once it took off from there, that was the beginning of the big move. So that's a big point. Then you got a high point here in, you got a high point here in 2016, and you got another high point there in 2018. And then you have a high point here. Some of these currencies are indicating, and we'll have to see how this pans out. It's having an indication that the market may roll over big time in stocks, and there could be a stampede into the dollar. If that is the case, that could be, could be a very good tip. So we're going to know that sooner rather than later, because we're up against the resistance today. I don't have the current quote in front of me, but you know, we've run up to that 4240 area, 4240 area. It's either going to break that door down, or you know, it's going to give up. So on the S&P. So if we were to roll over for whatever reason, say some of these things that come out with the Fed meeting and the CPI and earnings does not excite people between now and July, and they roll the stock market over, these currencies could have a drop. That's going crazy, and other things as well. So there you are on the longer term graph. And now let's bring in the telescope towards the 5-year. And the 5-year, again, RSI is banging up to a higher level. And then you have a high point here surrounded by some lower highs. So right now your line in the sand has been established at around 83.35. And the RSI is a little bit extended. Taking a look at the 1-year. Looks a little tired. RSI has been coming down while the market has been steady. I don't know if that's bullish. To me, it would be kind of, now let's put it this way. If it starts breaking 82.50 and 82, I'll say it's bearish. So again, you're just hanging around here doing nothing. You start breaking 82.40 and 82 even, that low right there. And then this RSI breaks underneath 50. You could have something there. Other than that, this high here comes in at around 80.80. Another high here comes in at 80.24. So it looks like anything above 80 should be support. And so if you're a short-term trader, you might get a scalp down here. RSI might go from 58 down to 50 like it did here. But every time it hit 50 was a time to buy. So if you do get a correction, we know that the 20-year graph is rising, and that's a positive. So if your macro view is these things are ultimately in an uptrend, then what people might do is look for the drop and then buy on the dip. If you're short-term trading, let's look at the 6-month and the 1 month. All right, so there you go. It is deteriorating, but it hasn't accelerated to the downside. Where's your RSI? RSI is still in the 50 area. Okay, let's go to the 1 month. Again, you know, these are very, very choppy charts as far as I can tell on the currencies, which is telling me that people are not, they're indecisive. And once they make the decision, you know, the way they tend to say it is you measure the width of the chop area and then you measure it from the breakout point, and it gives you an idea of what could happen on a move. So again, between now, which is June, and end of summer, end of year, which is what, 3 to 6 months away, not a long time, something very big could happen in these currencies. And again, don't fight the tape. So anyway, on a short-term basis, you're looking at the RSI has broke under 50, but it's done that before because you're in a choppy market. Again, the best thing I could say is you get above this area of 83 even, 83.25, then you can talk bullishness again. And if you start breaking 82.50 and 82, you could start a deterioration that could be at least give you a point or so on the downside. But the big move, if it's going back towards 90 or 100, has to go through 83.50. Sometimes I'm from the school of I'd rather buy it at 83.50 on its way to 90 than buy it here at 82.60 and find out it's on its way to 81. So right now it's indecisive. And again, your parameters there are pretty simple. And there's news going to be hitting the market. So, you know, this sideways action is not going to last forever. That's for sure. Okay, so where did we go? We went over the Canadian dollar. We went over the Australian dollar, the two commodity-based currencies. We went over the euro and the British pound. That gives you Europe. And we went over the Japanese yen. And that gives you a little bit of action in the Asia currencies. And those really are the major ones that people are trading and the ones that people are working with. I wouldn't mind taking a look at the gold and silver, because if you're into the currencies, you should be into the gold and silver from the standpoint of obviously a lot of that has to do with what the currencies are doing as well. So let's take a look at the gold and silver as a bonus here before we shut down the program for the day. And let's put up the gold and silver. Actually, I'll give you gold, silver, and Bitcoin. All right. Okay, the gold prices, you know, we felt bottomed at 1675. Why do we feel that way? Because it made a 61% drop from the move. What move? We started at 1040. We ran up to 26.4. We've been very accurate. Okay. And in the newsletter, we've printed it right there for you to read. Now, have we bounced off 1675? You bet we have. Now let's take a look at the graph and see what looks like is going on. Okay. Right now, you know, the support on, well, hold on now. This is a 20-year graph. You certainly don't want that 1675 getting taken out. In fact, if it ever did, it would probably spell a very big drop in the price of gold. So 1675, the 61% pullback from the move that started here at 1040, right around there. That's where we were measuring from. Okay. So trend still looks up, but it looks a little stalled. RSI, what's it look like on the long-term graph? Still positive, still positive. Okay, let's pull this, the thing in quick. Go to the 5-year. Still looks positive as long as we stay above 1829. Go to the 1-year. Looks like it's a little bit dodgy. And if it takes out 1850, you're probably going to get a pretty good drop in the price of gold. You go to the 1 month. We'll see what the 6 month looks like as far as the graph. Yeah. So again, take out 1850, you might get a good drop in the price of gold because your RSI is up at 60. And if you start taking out 1850, it may not hold 50. Right now, everything looks okay. Looking at the 1 month. Again, you can see 1870, you wouldn't want that taken out right now. And the RSI on the 1 month is right on the ledge here. So you start taking out 1870 on the downside, 1860, then of course your 1850, then you would want to be prepared for a correction in the gold. I think my 1 year moving average is around 1852. So we really don't want that 1850 getting taken out. And then of course, if it gets above 1950, you're going to be going after the highs in our opinion. Let's take a look at the silver. I'm just going to look at the 1 year and I'm going to look at the long term so I can get the other two in real quick. Okay. 20-year on silver, obviously looking good. Got to stay above that 25 number. RSI looking pretty good as well. On the 1 year, you don't want this thing breaking underneath 2715. And if we can start getting back above 2850 again, it looks like it would be off to the races. So silver looks pretty good as long as it stays above and below, it stays above that number we mentioned, I think. Otherwise, you could see some corrective activity. But the RSI is still above 50. So when that's happening, the surprises tend to be to the upside. But you got a decent line in the sand there, right around 27. All right, let's talk about Bitcoin. we thought Bitcoin was going to be having a drop because it was so far away from our moving averages. So this drop has not surprised us at all. We're using GBTC as a proxy, and we think 28 was the bottom. So there you heard us. That number right there in the 26, 28 area, that measured out about 61% off of this move here. Or was it 38%? Let me double check. Where we at? We had to 58 times 38. Yeah. Let me see here. Yeah, we measured the move, and our two lines in the sand were around 28, which it looks like it penetrated for just a short time, but now it's right back above it. So that could just have been a snake job where they went after some stops or something, and now it's back on the horse. So as long as we're above 28, that's very good. Our second number is 22. So you see this these gaps down here. You know, there's a gap there at around 23 and another gap right there at 21.17. So 21 to 20 to 22, and then another gap here, 23. But we don't think this is over. And so the bottom line is that if you are a believer in this, then obviously you're supposed to be buying on the big drops, and you're definitely had a big drop. So, but you don't want to hold it to kingdom come, maybe. So if you were looking for lines in the sand, ours have been ballpark 28 and ballpark 22. Okay. Looking at Ethereum, our ballpark on that is in the 20 to 23 area. And we use ETHE as a proxy for that. And so there you go. Again, it's nice to have some parameters, you know, when you're getting into these things. And you don't really want to run away from things that you think have a future when they're on discount and on sale. That's probably not the best strategy, to run away from things that you think have a future when they go on big sales. If you don't believe that, then, you know, obviously stay away. But these guys have blockchain that can be programmable, and that's why we are very much thinking this would be one of them as well. Obviously, speculative capital, right? Okay. So we're talking about, we thought 20 to 23, right? Where did we get that number from? We got these lows here and that high. We think that's not going to get taken out. And we thought that this high up here around 22.5, where that high is, we thought that might not get taken out. So that's our parameters, 20 to 22.5, right? And now we're back up a little bit here. If we get back above the moving average, 26.63, that's even better. Okay. All right, guys, we're going to wrap it up here. And I just wanted to, again, reintroduce ourselves. It's optionprofessor.com. And basically, we have a weekly market update where we cover stocks. Well, obviously, we cover current events. And then we go into the stock market, growth, value, cyclicals, et cetera. Then we jump over to income. We talk about tax-free, preferred, corporates, high yield, senior loans. Then we go into international, where we tell you how to go about getting into emerging markets, how you go about getting into Europe, how do you go about getting into Asia, Latin America, you know, Brazil and Mexico. And then we end up with speculation, where we go over the gold, the silver, the Bitcoin, stocks that are going nuts, that are speculative of nature, and different other markets that are of a speculative nature. So we give you 4 basic areas, and it goes out to you once a week. So if you'd like to look at what we do, go to optionprofessor.com. And if you'd like to sign up and get this information to you each and every week, you go to optionprofessor.com/subscribe, and you'll find that the rate is really a giveaway rate. So there's really a no-brainer. And we've got 4 decades of experience that we give you. And we give you, in our view, a very balanced presentation that adds value to your research. Okay. All right. This is optionprofessor.com. Hope you go to the website so you can start getting our newsletter each week. And then basically we'll be talking to you soon during some of the other broadcasts. I hope I gave you some information you could work with on those currencies. But again, in our newsletter, in addition to currencies, we go over a lot of information that's, in our view, adds value. Again, optionprofessor.com. We'll talk to you later, and I'm going to turn it back over to David now and Anka. Thank you guys for having me, and we'll be talking soon.